Hey traders, John Howell here. In today's video, I want to talk about the gold chart only and the gold cup and handle. And are we still creating the cup and handle? One. And secondly, if we do create the cup and handle, what is the confirmation that the cup and handle is actually completed? And then three, if it is completed, where is the target of where gold is likely to go? So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. If you haven't done so, go to Johns, Johns, freetraining.com. I've just released a brand new training walking you through my #1 powerful trading pattern that produce explosive results. If you're looking for an amazing trading pattern that can produce an explosive results, and I'll walk you through many trades, then just click on the link in the description or go to Johns, Johns, freetraining.com, and you can grab it. Looking at gold right now, and it's very, very, very interesting. Gold, most of the time, a lot of traders are just focused on the very, very, very short term. Like the biggest mistake they make, if I go back to this chart here, let's go back to the weekly chart. The biggest mistake they make when doing their analysis is they look too close, right? They're looking at the bars here. Oh my goodness, it went up today. It's good. It's finding support. Oh, it went up today. Oh, it's gone down today. Like they're very emotional about the small up and down, up and down, up and down, up and down movements. Right? Very, 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 very emotional about those up and down movements. See, one of the most powerful things that I've learned from my mentors that has made a huge difference in not only helping me understand what's going on in the markets, but also be able to see some really big, major long-term trends that could be forming, and also be able to get me into situations that I could have 5, 10, even 20 times potential reward compared to my one risk. So that means if you put $1,000 risk down, you're potentially making $20,000 or even $10,000 compared to $1,000 risk. Now that's the sort of risk to reward, the reward to risk ratio that I absolutely love, and I recommend you doing the same thing as well too. Always be looking for those scenarios. Okay, we're likely to make a big move out of this, and if we don't, I'm risking 5% of my account or 2% of my account. But if I'm risking 2% of my account and this thing goes up, this thing goes up 5 times my risk, what's that? 2, 4, 6, 8, 10, right? So your account went up 10% by having a 2% risk. Do you see that? So they're the different opportunities that I always personally like to look for when I'm trading. And again, that's the reason why that pattern that I produced, again, it's a whole complete brand new training. I don't want to walk through it here because this is more of a cup and handle video, but that's the reason why I love that powerful trading pattern, because it gives me that massive reward to potentially, and it has a small risk when it comes to that. So when we're looking at the gold chart right now, the cup and handle, if we zoom out on this chart here altogether, like we zoom right out, let's actually go to the GLD chart, because the GLD chart gives us a bit more of a much better analysis. Actually, let's go to the monthly chart here. So the monthly chart is actually giving us a much broader view on what this market is telling us and what's going on. So we can see that if we have a look at gold, we can see that gold has had a move up. So the cup and handle looks like this. The market runs up, then we come back down, then we pull back, and then we go for a big run. Whoosha. Right, so this is where a lot of people are getting. So this is why I've always said long term, I'm actually bullish gold, not only because of inflation, etc., dollar devaluing, but also chart. Right, so the farts are with me, and they smell pretty good too right now. But the fundamentals are behind me as well too. So this little pullback that people are so. Please don't be so impatient with the gold, with the miners and metals, because those who are impatient, the jumping around, that's the biggest mistake. I promise you, the biggest mistake that I do is I get out of something too early because it's not moving. And guys, leave a comment below. Let me know if you've actually done this before. You get out of a stock, you get out of a thing because it's not moving, nothing's happening, and you want to race over to this thing that's actually doing well. when you get into that thing that you did get into doesn't do as well as it was doing. And then the stock that you got out of, guess what? Then that thing makes a big run. It's like, oh my goodness. Are you serious? So the stock that I was in actually made a big run, but then I got out of it, got into the thing that was running, and now that's actually not doing as well, or maybe even a loss. Oh my goodness. And guys, I have the t-shirt. It's just human nature, right? So looking at this market, look at this here. So firstly, we have a move up, which is the first part of the cup. Then we have a nice circle like that. And now we're still could be forming this handle formation. The big long-term picture, explosive moves, I believe, are going to come out of gold. But when I say that, guys, it takes time. When you see this here, this is from here to here is like 1.5 to 2 years of time. Not 1 month or 2 months, okay, guys? So please, just be patient. If you want to be part of these markets, understand that things take time. The anomaly is what you see with, GameStop, the good GME, right? And if you look at Bitcoin, guess what? Bitcoin made a massive move up in 3-4 months, yes, but what did it do prior to that? 2 years of nothing. So those people who were patient with the 2 years of nothing got rewarded with the 3-4 months of something, actually massive something. So that's what I believe we're likely to see with gold. So I believe we're still seeing this cup and handle formation. So this is the cup and handle formation here. Got the cup and we're getting the handle here. Now that's step number 1. Step number 2 is what do we look for to say this cup and handle formation is completed? And then step 3, what is the target of this cup and handle formation? Let's actually get straight into it. So the completion of this is we want to see a break above the previous high of where basically the handle started. So if we have a look at this here, let's actually bring this up there, right? So if we have a look at this is the actual, call this the handle, right? Call this the handle formation. Let me actually just delete that off the screen there. Actually, no, let's actually erase it off the screen. So if we see this, see how this is the handle? It's actually a bit of a channel, but it's called the handle within this big cup and formation. So it's still here. So what you want to see is you really want to see this thing break above really the 190. That's the previous high here. You want to see this hold and start to rally back above 190. Remember, guys, this is the big picture. So step 1, this is the cup and handle. Step 2, how do we know that the cup and handle is completed? It's completed once we start to break above 190 because we're starting to get back above this previous high here. And then now step 3 is where is the market likely to run to? So what you do is you measure from the absolute high point, you measure from the absolute low point of this cup and handle, and you project it. You go from the ultimate high point up through there like that. Then you go through the ultimate low point just like that. And then guess what? Then you extend this out like so. If I project this up, therefore, once we start to get this cup and handle formation doing its thing, and if we can start to get something like this over the next few months or 3, 4, 5 months, we start to get something like that, and we start to get break above 190 into the 200s, that'll give me confirmation that now we're probably likely to see a good 6, 12 months, maybe even more of good, solid upward movement, and the target would be 270 on gold. This is the GLD here, right? So this is the big picture here. So this is for me. For me, guys, I have always been in gold long term. I see massive moves coming with gold long term. And just because it's gone down for 1 day or 1 week, guys, if you want to be part of this, if you want to become part of this market, you've got to understand how the beast works, right? The beast doesn't go up every day, and just because it doesn't go up every day doesn't mean it's not working. Right? Like, for example, there's a trade that I got into and it did nothing. It actually went against me a little bit for about probably 2 weeks. And then guess what? And then 3 and 4 weeks. And then week 3, I was in a profit. Week 4, I was in a nice profit and I got out. So you just never know. Just because when you get into something, it doesn't go for your favor that next day, doesn't mean that it's not working. Firstly, you've got to have some sort of a rhyme or reason why you get into things. But just be patient with things, guys, okay? Just be patient. And above all, you shouldn't have a lot of risk on your account. You shouldn't be loading up 50% of your account in one position. Don't do that, guys. Stop trying to look for home runs. You might have 5% of your account on the gold, in gold. You might have another 5% in another market. You might have another 5% in another market. I mean, like spread them around across different opportunities. And therefore, you might have 4 or 5 opportunities going at once. 5, 10, 15, 20, 25, right? So say basically 25% of your account in 5 opportunities. Guess what? You still got 70, 75% of your account sitting there ready for more opportunities as they come around. But you're not hoping one position is going to make you the money. And that's where having small portions or good portions are split across the markets. Therefore, as ones are doing well and so on and so forth, you can start to take them off the table. So please, guys, be patient. And make sure that you're not risking too much on one account or too much on one position, because that's the worst thing to do. So I hope this helped you out today, guys. Once again, guys, go to Johns, JOHNS, freetraining.com. In that free training, I'm going to walk you through my number 1 trading pattern. And as I've been talking about in today's training, that the best thing to do is look for opportunities that can give you a 5, 10, 20, maybe even more potential reward compared to your one risk. I don't care if if you're looking for stuff that does that, you could be 50-50 right and still absolutely have an amazing trading career. Because guess what, guys? You're going to have losses. Stop trying to avoid losses. Stop trying to be right in every market. And if you want to be a professional trader in these markets, then you must understand the beast and the nature of how these markets work. So stop being a little bumblebee when you jump into something and it doesn't work for a month, and so then you jump out. Because those who have jumped out of gold and mining stocks, I believe 12 months from now, you're going to be looking back saying, why the hell did I jump out of those things? And even 2 years from now, you'll be definitely looking back saying, actually not definitely, there's no definite about the markets. So anyway, guys, make sure you subscribe, comment, let me know what you think. And also, what target do you think gold is likely to go to? Speak to you soon, guys.